Welcome back everyone to this lecture on candlestick and Heikin Ashi charts. Now this is a continuation from the previous video where we spoke about line charts and bar charts, and yeah, so now let's talk about candlestick charts. So in the previous video when we spoke about bar charts and we had a bearish bar that looked like this, and if we modify this into a box and color it in red, this is what would be known as a bearish candlestick. So so the high is here, the open is here, the close is here, and the low is here. But also it has an upper shadow, which is also sometimes called wick shadow. Sometimes they use interchangeably. And a real body is the middle part, and it has a lower shadow as well. And for a bullish bar, let's look at a bullish bar for the bar chart. So here it is, and let's modify this as well. So here is the close price and here is the open price, and you will see that the bar chart and the candlestick charts are structurally identical but visually different. And let me just show you an example of a candlestick chart. So here is the Euro USD chart on 2-on-2 trading, and as you can see on the far right, the top part is the high, the bottom part is the low, and the middle part is the real body. And an example of a bearish bar is here, so that's one bear, and an example of a bullish bar. So also, because we're going to be trading on MetaTrader 4, I thought it would be a good idea to look at another candlestick chart from MetaTrader 4. So let's have a look. So now it's different. The colors are different. So there's no green and red anymore. There is a black and white, and the bullish bars are the hollow ones or the white ones, and the bearish ones are the black ones. And how do you know which one's which? And especially when you start looking on other websites now and there are different colors, how would you tell? Well, if you're unsure, then this is a good way to tell. So if you want to know if a bar, let's say the middle bar, the white or hollow bar in the middle, the long one, and let's say that we want to find out if that's a bullish or bearish bar. Well, you look on the left to it and you look on the right to it. You look for basically for the candlestick on the left and on the right. If the candlestick to the right of it is higher than the left one, then it's a bullish bar. And here is an example of a bearish bar because the candlestick on the left is actually higher than the candlestick on the right. So that's a bearish bar. So that's basically how you would go about figuring out which one's which. So here is an example on the MetaTrader 4 app, and it is 4:06. That is the time right now, and this is the minute chart. So after that minute's up, so when it goes to 4:07, a new bar will form because this is a minute chart. So when this so now it should form around about now, and that's the opening price, and that's the new high, and that's the new high. It's gone down now, and that's a new high, that's a new high, that's a new high, and now it's gone down. So remember, this is a minute bar, so at 4:08 this bar will be ended and a new bar will form. So yeah, let's have a look. It's just fluctuating, but I just want you to get an idea so you understand how it works. And now the minute's up, so a new bar is formed, and that is how it works. So traders like to use the candlestick charts because of the amount of information that gives them in the shortest amount of time and in the clearest way possible. And another thing about candlestick charts is that sometimes it can show a lot of information about the market and whether it's a good time to trade or not to trade, based on the actual structure of the candlestick. So here is an example of something called a spinning top. Now, here we are with three bullish candlesticks, but the last one I drew has a small real body and a long upper and lower shadow. And what does this tell you? Well, it would tell traders that the market is indecisive. So we could maybe be expecting a bearish reversal pattern here. And this is what I mean by it gives traders a sort of a lot of information about the market. And this is called spinning top. And let's move on to another one. There are loads, and when I go through the summary of the candlestick charts, I'll name all of the ones that are the most important ones. So, but for now, let's talk about bullish engulfing. So let's say we have three bearish candlesticks, and after that we have a bullish candlestick whose real body covers the bearish candlestick on the left to it. This is what you call bullish engulfing. And what does that mean? Well, it means that the buyers outpace the sellers in the market. And this signifies the bottom of a downtrend. So this means that perhaps now the market is going to start following a bullish trend. So it might even look like this, perhaps. And that's how it looks like, and I hope you do understand the sort of information and how important candlesticks are. And let's summarize what we have learned about candlestick charts. So candlestick charts um, are clearer than bar charts. So even in candlestick charts, you can see trends a lot easier, and and it's just much clearer to most traders. However, it does give the same amount of information though. So it doesn't give more information about it or anything. It's exactly the same. And another thing though is the most popular chart that traders use on the market. And it's used by technical traders for entering or exiting the market. Like I showed you with those strategies, with those patterns, and how it can give traders information about whether to enter or exit the market. Very useful, and it's the best at spotting opportunities to traders. And like I said before, it gives the most information in the clearest way possible. And lastly, what I'd like to say is that it gives numerous indications and patterns, and I'm going to name some of them. So there are the bullish and bearish engulfing, which we explained, the spinning top, which we explained, and then there's the doji patterns and the harami and the three white soldiers, hangman, hammer. There's loads, and I hope you've learned something about candlestick charts. And later on, when we talk about technical trading, I will go through each and every one of these and analyze them and show you how they can be used to act in the market. So now we're going to move on to Heikin Ashi charts. So what is a Heikin Ashi chart? Well, Heikin Ashi is Japanese for average bar. And what this is it averages out the candlestick chart and it provides traders with information about the trend of the market. So let's say a trader is in a trend, a bullish trend. It gives the traders information about the momentum of that trend. And right now we're going to calculate the highs, the lows, the open and closes of the Heikin Ashi. So let's get started. Now, let's say we have a candlestick here. So this is a bullish candlestick. And here is the high, the open, the low, and the close. And the initials here are H, C, L, and O. Now let's say the next bar is a Heikin Ashi. So here is the bar, and the high is represented as H2, the open is O2, the close is C2, and the low is L2. And how do we calculate them? So let's start with the opening price. So the opening price is the average of the previous bar. So it's equal to the previous open plus the previous close divided by 2. And the close of the Heikin Ashi is actually H2 plus O2 plus L2 plus C2 divided by 4. And the high of the Heikin Ashi is the maximum of H2 or O2 or C2, whichever one is the highest. That is the highest of the Heikin Ashi. And the low of the Heikin Ashi is the minimum of L2, O2, or C2. So in other words, which is the least out of the low, the open, or the close. And so that's really how you work it out. And if you're a bit confused about how to calculate all of these, don't worry about it, but just know that it's just an average. And we're going to show you the chart for Heikin Ashi and the chart for candlestick at roughly the same amount of time, so you can have a look at the difference between them. So here it is. Here are two charts that I'm going to show you, and you can probably guess which one is the Heikin Ashi. And if you guess the right, then you are right. And you can see how it smooths the candlestick chart, and I've just circled in yellow some parts which are not shown on the Heikin Ashi, and especially the second to last one that is circled. If a person was to see that bearish bar, that they might be deterred from continuing in that bullish trend. But when they look at the Heikin Ashi, they will be encouraged to continue in that trade, because they can observe the bullish momentum is quite strong. And some people would recommend that if there are two bars that are consecutive, so let's say there's two bearish bars, then it would be advisable to end that trade. So let's move on to the two more charts. So here is the candlestick and here is the Heikin Ashi. And again, you can see how smooth it is, and how easily you can observe trends as opposed to the candlestick. So sometimes we will say that the candlesticks provide they give noise, so they give background noise that can disrupt, for example, a trade, and can confuse traders. So the Heikin actually allows traders to, in a sense, trade without noise. And another thing to note is that if you look at the Heikin Ashi open price of one of the bars, so take one of the bars and look at the open price, you will see that it is in fact the midpoint of the previous bar. And this is different to the candlestick, where the open price was essentially very close to the closing price of the previous bar. And for the Heikin Ashi, this is very obvious, because when we calculated the open price of the Heikin Ashi, it was the open plus the close price of the previous bar divided by 2. And because the Heikin Ashi is an average, the actual currency rate is not represented. And if you're, for example, a trader who wants to trade 3-4 times a day, they might find the Heikin Ashi to be a problem for them. And another thing I like to say is that although it is visually akin to the candlestick, it looks very similar, and the highs, the lows, the open and close, it has that too, but it is very different in terms of the calculations of it. And this is the reason why it looks different as well, and this is the reason why you can see the trends that you do, and the smoothness that you can see. And so let's summarize what we've learned about Heikin Ashi. So they're used alongside candlestick charts, so they assist with trends, and they're in a sense trading without noise. So let's say sometimes in candlestick charts, a false signal can be given by market makers, and these are like, for example, hedge fund companies, massive companies that can affect the forex market, and the high can actually really mitigates the effect that these false signals have on the forex market. And this moves on to the next point, that it keeps traders in a trend. So let's say there's a trader and he's in a bullish trend, and he's um he's not sure because of these market makers. And what the Heiken actually does is it reassures him about the momentum of the bullish trend, and allows him to remain in that position and not close his position. And another thing that, which I said before, is it's an average. So the chart doesn't show the actual currency accurately. And the last point I'd like to say is that it can be used for buying opportunities. Like, when we looked at the candlestick charts and we saw all the strategies, the hammer, the hangman, the bullish engulfing. This can be used with the Heiken Ashi as well, and it can be much stronger in some instances because it's an average. And let's take, for example, let's say you see a bullish bar with no lower wick. This will give you an indication, for example, of a strong bullish trend. And if you see a candle with a small body, a small real body, then this can indicate a trend change. So this can also give you information about the market conditions as well. And yeah, so I hope you have learned something new about Heiken Ashi and candlestick charts. And I will leave my lecture notes available for everyone to see at the end. And I hope to see you in the next video.